Hello and welcome to weekly corporate round of Mint. And the last week was dominated by earnings of country's largest private enterprise, which is Reliance, and India's largest engineering and construction company, Larsen and Toubro. And we also heard that the last week's story of Mint about asset sale. There were a lot of developments which Mint covered about the how companies are struggling to reduce their debt and how they are selling their assets to stay afloat. So I'm joined by Madhura. Madhura will take us to the key two earnings which dominated last week. Madhura, welcome to the show. Could you tell me like what is how is Reliance result went, which is the country's largest private enterprise?
So Reliance reported a set of numbers which were in line with the street estimates, and for the first time an Indian company reported a quarterly earnings which crossed the 1 trillion mark. And the important part was that the depreciating rupee has helped Reliance because it has a dollar inflow in terms of its oil and gas production. So overall the results were in line, and the company seems to be on a slow growth path for the future.
Also, I understand that Larsen and Toubro has dropped. Its net profit was declining. So what is the real story which that L&T results is telling the corporate world?
So L&T has posted a drop in net profits for the third consecutive quarter, and that really shows that capital goods companies in India are facing challenges from the sluggish economic growth. We've seen that IMF is projecting the growth to be sub 5% next year. So there is no investment demand. There are slow project executions, and that's why a company like L&T, which is like the behemoth of engineering in India, is going through these tough times. And the management also seemed a little less confident about its future. However, the company has a robust order book, so you can't totally give up on the quarters to come, and we hope that the inflow of orders will help it to take it back on where it was.
Thank you, Madhura. And I think it is coming where the margins are shrinking, and there are a few number of companies struggling to get the order, and which is they will have to sacrifice their margin. And I'm coming to Malvika Joshi. I'm joined by Malvika Joshi. Malvika, welcome to the show. Companies are trying to stay afloat when the the debt levels are going up. And one of the smart thing when we actually interviewed Raghuram Rajan, RBI governor, he was also telling that he has started seeing the companies selling the assets. So, and what is Reliance Group control Reliance Infrastructure doing to stay afloat?
Sanjay, we know that Reliance Infrastructure has exposure in roads. It is in metro rail, bit of it. It has about 11 road assets, which out of which 9 are operational. So the company has put these 11 projects on the block up for sale. However, we are seeing that there are about 40 to 50 odd road projects across the country that are up for sale at this point of time, because most of these road developers are bleeding because of rising interest rates, lesser footfall than was traffic than was actually projected. So it will be a challenge, definitely a challenge for Reliance Infra to sell all these assets successfully at a good valuation. But so far we have seen that they have appointed E&Y as the banker to take care of the sale.
Thank you so much. Reliance Industries continue to grow better and better, while other companies are struggling to post better results, and some of the companies are trying to sell off their assets, strip out their assets to stay afloat. And for more actions and more updates, please log on to www.livemint.com.